Wall Street rebounds lead gains across Asia as US inflation numbers come in lower than expected. The global art market slumped in 2024, prompting Sotheby's to cut 100 jobs. And Tesla's value takes a historic dive. Is Elon Musk's new role in the US government to blame as investors panic and economists push back? Hi there, I'm Neil Harvey here with your latest business and finance news on TRT World. Tech stocks have led gains in Asia following a rebound on Wall Street caused by softer than expected US inflation data that eased market concerns about the economy. Japan's Nikkei 225 surged as much as 1.2%. The broader topics gained 1%. South Korea's Kospi gained 0.8%. The small cap Kosdaq advanced 0.37%. But Chinese stocks were choppy. Hong Kong's Hang Seng sliding more than 1%. The mainland CSI 300 down around 0.4%. The US Consumer Price Index, a broad-based measure of costs right across the economy, increased by a moderate 0.2% in February. That put the annual inflation rate at 2.8%. And over on Wall Street, the tech-heavy Nasdaq picked up after the inflation report eased fears of a possible looming recession. The S&P also reversed losses and the Dow Jones slipped around 0.2%. Well, let's discuss this in more depth now with Russ Mould, who's Investment Director at AJ Bell. Great to have you on, Russ. As I just mentioned, softer than expected inflation data in the US. How does that influence the markets in Asia, especially the tech sector? Why did that pick up so much?
Yeah, I think it helped overall sentiment in the US. And as you say, it gave a lift to the Nasdaq that suffered the worst of the recent sell-off. I think that slower than expected increase in US inflation raised hopes that the US Federal Reserve would have more scope for cutting interest rates this year. The Bank of Canada actually cut interest rates yesterday to perhaps set the tone. The Federal Reserve meets next Wednesday. No rate cut is expected there, but they are expected to lay the groundwork for 2 or 3 cuts for the rest of the year. And that, passed on some hopes for, better economic growth for which, if the world's biggest economy, America, is growing, then there is potential benefits to all those who trade with them around the world. Tariffs, of course, permitting.
So we saw some of the Asian markets going up, but not all of them. So Hong Kong's Hang Seng, China's CSI 300 going down. Why the inconsistency?
Yeah, I think the situation that you have with China and to a lesser degree Hong Kong are still ongoing fears about the real estate bust that we've seen in China, the situation that faces some of their banks with the potential credit losses that they have hidden on the back of their books. And therefore, there are some still lingering worries that China will struggle to meet its 5% GDP growth target this year. You also, again, have that big issue of tariffs, where China is very much in the firing line as far as America is concerned.
It feels like the markets don't know which direction to go in over the last week, up and down, and hanging, it seems, on every word of President Donald Trump. To what extent is his rhetoric in this trade war that just seems to be getting going, to what extent is he really dictating the markets globally?
Certainly markets, as you say, are paying very close attention. If it weren't for my job, I'd probably be very tempted to turn the screen off and stop reading the newspapers and the websites, because as an investor, you need to try and take a step back and not get dragged into responding to this day-to-day situation. And if you're running a company, it must be incredibly difficult if you're trying to work out supply chains, customers, pricing, raw materials. It must be terribly challenging. That's, I'm sure, and if you're a company and you're in that situation, your inclination is probably to do not very much. So you may not hire, you may not spend. And markets have begun to get worried because we have seen some noise, at least in the American economic data, some signs of softness. Again, they could be easily influenced by some of the day-to-day statements that we're seeing. But that's why markets have got worried. You have begun to see some companies reflect concerns over demand and the wider economic data. And if that continues, we could see more volatility from a financial market point of view.
Exactly as you said, it's very easy to get caught up in that day-to-day minutiae. The market's going up, going down, reacting to the slightest piece of input. But the more concerning message for me is that there's been increased talk about a possible recession in the US. So if we pull back for a moment, looking forward, do you think that's a genuine concern?
And it's interesting that the Atlanta Federal Reserve, it does a GDP Now survey that's based on very timely economic data. It is predicting a drop in American output in the first quarter of this year. That's partly because of how the data is calculated. Imports subtract from the number, exports add to it. And there is a lot of evidence that American firms have been busily drawing in raw materials and the parts they need to beat the tariffs. So that's lots of imports. That's hit the number. One thing that we can say is that nobody is, so when we started this year, nobody was expecting a US recession. Analysts are expecting double-digit 14, 15, 16% profits growth in the S&P 500 this year and next year. If the American economy did unexpectedly slow or tip into recession, those numbers will be very difficult to beat. And again, that's one of the reasons why we've seen volatility in share prices recently, because expectations were high, valuations were high, and maybe those expectations might not be met.
Yeah, we don't always get what we hope for, that's for sure. Russ, great to speak to you. Russ Mould, Investment Director at AJ Bell. Tesla's stock is tumbling, marking its steepest drop in years. Now, the reason for that, Elon Musk's new role in the Trump administration. Economists say that it's time to push back. Investors are growing wary. Lara Kilichaslan has details.
Tesla shares have plunged 15%, the biggest drop in 5 years. The stock has now lost more than half its value since December, wiping out nearly $800 billion in market cap. And investors are worried. The slide started right after Elon Musk took a key role in Donald Trump's White House, leading the Department of Government Efficiency.
It's one of the few places we have leverage. You know, Musk's power is based solely on his wealth. It's not like he's got anything else going for him. And his wealth is based almost solely on Tesla. And, you know, honestly, you know, the stock has gone down a lot recently. It's still overvalued. You know, if we can help make the brand toxic and have people dump the stock as well, then he will have less power and he will be of less interest to Donald Trump.
Musk is also juggling multiple businesses. His social network platform X suffered major outages, and SpaceX is investigating 2 rocket explosions in a row. Protests have also erupted outside Tesla facilities across the U.S. On Saturday, more than half a dozen Tesla charging stations in Boston were set on fire. Musk said he's managing the situation with great difficulty.
Elon Musk has taken on such a massive role in the Trump administration, but he is an unelected billionaire who has not been confirmed by Congress. I don't believe that he has the best interests of the American public.
At the same time, Tesla sales are slipping. In Europe, new Tesla vehicle registrations dropped 45% in January, and sales are down in China too. With stock prices failing and demand cooling, Tesla is facing pressure on multiple fronts.
And Elon Musk, I mean, there again, his wealth has come in tremendous part from government money. You know, whether it was Tesla, whether it's SpaceX, you know, every subsidy in the book, he has gotten it, and that's why he's there. That's why he's in the government.
Meanwhile, the tech billionaire is officially over $120 billion poorer than at his peak. Some analysts believe Musk's politics are hurting the brand, while others see an opportunity. But for now, one thing is clear. Tesla is going through a tough time, and investors are watching closely. Lara Kilichaslan, TRT World.
OK, let's cross over live to London now and speak to Steve Fowler, who's an automotive editor and consultant. Pleasure to have you on, Steve. As we just heard there, one fundamental that can't be denied, that the sale of Tesla cars is down quite a bit. Is that the reason we've seen these huge drops in the share price, or is it also an opinion poll on Elon Musk as a person?
I think it's a combination of things. Firstly, good morning. And of course, Elon seems to have another customer, judging by yesterday's reports. He seems to have sold a car to Mr. Trump. But yeah, I think there are a number of things that are converging here. Elon Musk has always been a divisive character. His cars have always divided opinion. There's a lot of people who are very pro-electric cars, are very pro-Tesla, very pro-Elon Musk, and they're still very, very vocal. But I think what he's doing in government has certainly given his opponents an opportunity to talk about the bad things about Tesla and Elon and his politics. So you cannot take away the fact that Elon and Tesla are absolutely unified. You know, the guy is the figurehead for the brand, and what he's doing is upsetting a lot of people, which is affecting sales and the stock price.
Yeah, I mean, I wanted to ask, when Tesla was at its all-time highs, was that not, I always got the impression it was intrinsically linked to the personality of Elon Musk. So, for example, if tomorrow he gave up all his other projects, SpaceX, working with the government, and said, I'm going to focus totally on Tesla, would the share price not rocket?
I don't think it would rocket. I think there's still enough people that, a leopard doesn't change its spots overnight, does it? But you've got to remember as well, and we have to be honest, and I have to be independent here. The cars are really good. Teslas are probably leading electric cars in terms of their technology. They're improving the build quality, so they are really good electric cars, and they're priced really well, so they are competitive. Now, not everybody likes the brand Tesla, what the brand Tesla says, but Elon being intrinsically linked to that brand and being there's not a day that goes past without Elon being in the headlines in some way, shape, or form. And yeah, undoubtedly, what any CEO says has an impact on the share price. More so when you're working next to who is possibly the most divisive president in US history.
I mean, it is understandable, isn't it? If you're an investor and you see the head of a company you've put your money into also focused on another company, SpaceX, also daily on TV working for the government, isn't that going to give you question marks about how focused they are on the company that you're interested in?
Yes, you're absolutely right. I think the first and foremost, Tesla is way bigger than just Elon Musk. But any CEO in this position is exactly the same way. Now, I've met Elon a couple of times and spoken to him. The first time I spoke to him, he made it clear that his goal was to get to Mars, to build a colony on Mars. And that is still his focus. Now, whether he sees his work and closeness to the US government as his way to achieve that, I wouldn't put that beyond the realms of possibility. But if you look at his workload over the years, he was running Tesla. Then there was the Boring project. Then there was, of course, SpaceX, I think is his big passion. Then there was X. Now there's government. The guy takes on more and more. And he's clearly said, I think his words were, it's difficult managing everything. Now, if you are the boss of a company, your shareholders do want a bit of focus. So I'm not surprised we're seeing a bit of restlessness amongst the stockholders.
Steve, some really great insights there. I appreciate them. Good to speak to you. Steve Fowler, automotive editor and consultant. Well, let's take a quick look at other business stories making headlines today around the world. The US budget deficit has surpassed the $1 trillion mark, even though the fiscal year is not even at the halfway point yet. The shortfall reached a record $1.15 trillion through the first 5 months of fiscal 2025. That includes a $307 billion deficit for February. President Trump's first full month in office. The gap was mainly driven by higher interest payments and increased Social Security spending. Russia's annual inflation has surged to its biggest level in 2 years. It's driven by massive government spending on the war in Ukraine and deep labour shortages. Consumer prices rose 10.1% in February from a year ago, despite an increased cost of borrowing. Last October, the country's central bank raised interest rates to 21%, the highest level since 2003. Intel stock surged more than 11% after the announcement of Lip-Bu Tan as the new CEO. Tan, a former board member, replaces Pat Gelsinger, whose turnaround efforts faltered. Known for his success in backing startups like Annapurna Labs and Nuvia, Tan is expected to leverage his industry connections to steer Intel through its challenges and strengthen its chip design and manufacturing operations. Plus, Japan's aiming to increase rice exports eightfold by 2030, following a significant decline in domestic rice consumption over the past 6 decades. The export target is set at 350,000 tonnes, valued at $623 million. It's part of a broader policy to boost exports and to improve farming efficiency amid an ageing population. China has announced major steps to revive its economic growth in the coming year. Officials have said that they are aiming for an expansion of 5% and will increase spending on major projects and initiatives. But will it be enough? Emery Boz takes a closer look.
The world's second largest economy is in rough waters. It's plagued by several challenges, like a declining property market, huge private debt levels, and weak domestic spending. So this year's 2 sessions, where China's parliament and advisory body announce growth plans, will determine if the economy sinks or swims. But how will the government do this? One area of interest is artificial intelligence. Beijing has announced it will invest $138 billion in capital over 20 years to support AI. They hope to embed AI into emerging technologies like biomanufacturing, quantum technology, and 6G infrastructure. Household spending makes up just under 40% of China's GDP, and currently it's lackluster. To boost spending, China plans to roll out $41 billion in subsidies for upgrades to vehicles, smartphones, and home appliances. And to promote employment, the government says 12 million urban jobs will be created through investments in services and green industries.
It is more about how the government is going to use the money, and is it willing to really able to execute different type of, say, infrastructure projects, consumption support, and or even other measures to offset some of the external headwinds from the very uncertain global environment. I think this means more to me than the number itself.
China's growth targets come during US President Donald Trump's trade war. And just recently, Beijing imposed $22 billion worth of tariffs on US farm goods, making growth plans for the Chinese economy even more difficult. Emre Boz, TRT World.
In northern Syria's Aleppo, several historic souks that were heavily damaged during years of war have recently reopened following their restoration. Once famous for its bustling markets, Aleppo's old city and its centuries-old bazaars are coming back to life after the removal of the former regime. Our correspondent Nizar Sadawi spoke with some merchants and artists in one of the markets there.
Once the beating heart of Aleppo, these markets around us here have seen both destruction and prosperity. War may have shattered its walls, but not its spirit. This is what everyone here says.
We are merchants of Aleppo who have returned, rebuilt and revived Khan Shuna after its destruction by the former regime. Today, 71 artisans showcase their work here, bringing products directly from the maker to the hands of the people.
Aleppo is a city famous for trade. This place, for example, a bazaar that is hundreds of years old. It was used by the Syrian regime, by Assad regime, to shoot at people, to kill people, and of course, to kill trade. This isn't the case anymore. This place, Syrians say, is a testament of endurance.
As women of Aleppo, we stood together in hardship, determined to create and contribute. Mosaic art was once confined to grand murals, but since 2018, we have trained to craft delicate gifts and pieces of our homeland, meant to be shared across the world.
Things are improving, but time is still needed. We have come 80% of the way, and the last 20% will take patience. But I have no doubt we will get there.
This is how they tell the world that they are vibrant once again, that they are still determined to rebuild no matter what.
South Africa has issued its revised national budget for this year, with major political parties immediately rejecting the proposal. The announcement followed last month's delay, which stemmed from a disagreement over a proposed increase in value-added tax. VAT will increase by 0.5%, with a possible additional 0.5% rise in 2026. VAT is currently set at 15%. Tax measures are expected to generate $1.53 billion for the next fiscal year. This comes as the budget deficit is forecast at 5% of GDP this year, dropping to 4.6% in 2025. Government spending will rise by 5.6%, the government allocating $54.5 billion over 3 years to improve the transportation network, energy delivery systems and water projects. Okay, let's bring in Tuso Kumalo, who is in Johannesburg for us. Tuso, how will the VAT increase impact South African households then?
The argument from many people here is that the economy in South Africa is already at a very bad footing for a lot of citizens, a lot of people not working, unemployment over about 32%. and with a lot of people, poverty also getting deep. So the argument is that any increase on prices of goods and services will make it unaffordable. Unions coming out strongly saying they don't accept that because they expect that the government would tax the wealthy people instead of the poor, saying any increase on services and on goods on the poor, on the working class, will devastate them. So in terms of the increase that has been announced in the budget proposal of 0.5%, there are rejections across civil society organizations, across unions, and of course, ordinary South Africans on the streets, because they cannot put food on the table. And to have those prices increasing, it will be impossible for them to eat by the end of the day.
There's still a big hole in the country's budget. So how realistic is it when they say they're going to invest in infrastructure improvements and they expect economic recovery?
That's the questions that a lot of analysts are asking here, to say the government has these ambitions to inject cash into infrastructure so as to create jobs, but that cash is not there. So it expects to raise cash from the taxes, and of course from the taxmen. Already we have heard that there's about 800 billion rands that's not collected, people that are not contributing tax. So the hope is that this tax collecting authority will be able at least to follow that cash. But a lot of people saying there's still a lot of cash that the government can raise from the wealth, but the government has not said anything towards that. So the ambitions are big. South Africa needs to create jobs. The economy is not doing well, but whether that is going to be possible, especially in the light of the arguments and disagreements that are happening within the unit government as to what kind of economic trajectory should this country take, it's going to be very difficult for the government to achieve its dreams. But the Minister of Finance coming out to say the government is determined, his budget is determined to create the number of jobs that are needed to improve services for the people. But whether that will materialize or not, only time will tell.
Tuso, thank you very much. Tuso Kumalo in Johannesburg with the latest.
Thank you.
Okay, let's take a look at the global art market. It took a real hit in 2024. Fewer high-end sales, a wave of auction cancellations, and Sotheby's, one of the biggest names in the art industry, responded by cutting 100 jobs. As upcoming auctions from Sotheby's and Christie's are set to reveal more about the market's direction, the current downturn has already left a lasting mark on the industry. Auction sales tumbled in 2024, the total value dropping by a third compared with the previous year. Sales amounted to $9.9 billion, but it sounds a lot, but that's the lowest since 2009, driven by political instability, wars, rising interest rates and economic slowdowns. And the downturn was felt right across the world. China took the biggest hit, its market shrinking by 63% to just $1.8 billion. Other major hubs weren't spared either. New York, London, Paris, all declining 29%, 28% and 21% respectively. Even sales of works by iconic artists, Pablo Picasso, Mark Rothko, severely impacted. Picasso's sales plunged to $223 million, down from $597 in 2023, a drop of almost 2/3. And while the high-end segment struggled, the lower-end market, that held firm. Art priced below $50,000, continuing to sell steadily, collectors shifting focus to more affordable pieces during times of economic uncertainty. Despite the slump, a few sales did still manage to turn heads. There was a painting by the Belgian surrealist René Magritte set a new record for the artist, fetching an impressive $121 million. And an AI-generated portrait of Alan Turing fetched $1 million, proving that innovation is still finding a place in the art world. Okay, let's bring in Richard Fitzwilliams now, art commentator, to get more on this. Welcome, Richard. So, I mean, I explained it there. It seems that there are less sales taking place and they're of lower figures. Why do you think that is happening?
Well, firstly, I mean, as you mentioned, we've had this enormous downturn in China, which over the last 30 years has become a major player. But also this has been mirrored in downturns, not 2/3 as in China, but also in the United States, Britain and also in France. And what we've seen very clearly is the way the art market, firstly, it's not regulated. There's no question that it's clearly been affected by geopolitical events. Obviously, COVID played a part in this, certainly in China, but also one's looking, as far as Britain's concerned, there was some effect from Brexit and inflation, high taxes and so forth. The problem is that, as you mentioned, top artists, Jasper Johns, Picasso and so forth, I mean, if they're not immune, you wonder what will happen next. The art market does go up and down so in an extraordinary way, because we had, for example, in 2021, there was something of a boom. This has echoes of the 2008-9 slump, and that would be extremely serious.
Is there an element of some of the owners of expensive works being reluctant to sell in the current climate? Is there an element of buyers wanting more for their money?
Well, one of the problems of the art market is you're not quite sure exactly what is happening. Certain galleries closing in London, auctions being postponed, but on the other hand, in certain cases, some have done extremely well. As you mentioned, there was a huge controversy over AI, the exhibition at Christie's. Some over 5,000 artists signed a protest about this. What we've obviously got is a very, very secretive and unregulated market. And within that, you get these extraordinary ups and downs, and they can sometimes happen quite quickly. But with the geopolitical uncertainty, especially in the era of Donald Trump, one might expect this problem that we've seen in the last year, and in 2021 you had this the reverse, that this might well continue. It's also, you've got something of it's been claimed a sort of rather secretive cabal, because you've got analysts, dealers, sellers and so forth, but the actual number of buyers are relatively small. In, for example, the stock market, it's so totally different because you're dealing with millions. So this is going to be fascinating to watch how it hands out over the next years. America is still 45% of the art market, Britain subsequently 18%, and then China. And it will be also interesting to see whether there could be some recovery in China or whether that will continue on the downward path.
Secretive and unregulated. I really appreciate the honesty there, Richard. Richard Fitzwilliams, art commentator. We'll have to wrap it up there, I'm afraid. Thank you so much, though, Richard. Great to speak to you. That's all your business news for now. No secrets here. Completely open and transparent with all the information. What's mine is yours. Thanks for your company. See you soon.